Welcome to Power Charting. I'm Bruce Fraser, your host, and today we are going to do part 2 of a discussion that was started on Market Watchers Live, which aired on June 27th. And in this first part of the discussion, we're going to make the case for how the economy could be turning into a new phase of its advance, and that this could take and pull the stock market along with it, and how this next phase of stock market advance is going to be different from the prior ones. It's going to emphasize certain industry groups and stocks that may have not been emphasized in prior phases of this advance, going back to the beginning of the big bull in 2009, 2010. So we're going to have that discussion in Market Watchers, and I thought what would be appropriate is to then have part 2 be a discussion of some of the areas of investment that are possible, that look like they could take a leadership role in this new phase. And in this leadership role, you're also going to have other industry groups and other stocks that are going to broadly participate in the advance, but also have the possibility of having these new areas not only participate, but also lead the way upward. So let's explore that possibility here in the next few minutes. I'd like to first invite you to come to a free event at the TSAA-SF.org website. This is the Not-for-Profit Technical Analyst Society in San Francisco, and we are going to have a discussion or a presentation on the Dow theory. And Alex Ivanov is a very dynamic speaker, and he's a great theorist on this Dow theory methodology. He was mentored by Richard Russell, and he is one of the leading proponents of Dow theory today, and he is going to introduce how to use Dow theory and how to trade with it. So please join us. Back in February, we had a blog material development, which was a discussion and an introduction to the US mining index. And this is an area that had been sort of forgotten. There's not a lot of interest in mining stocks here in recent years. And what you can see is this US mining index has been in a large trading range that goes all the way back to 2016, which we could define as a reaccumulation. So we have a buying climax, automatic reaction, created resistance and support. You can see how well it respected the outer bounds of this range-bound condition. And then here in 2019, you can see an attempt to become strong and jump out of a little accumulation area that occurred in late 2018 into 2019. And this became very interesting and sort of sparked the notion that maybe it's time for mining stocks to do well. Remember that the mining indexes, mining type stocks, materials stocks tend to do well in the later stages of an economic expansion. And of course, we certainly can argue that we are in the later stages of an expansion. As we talked about in Market Watchers Live on the, well, as of yesterday, but you'll be able to see the on-demand recording in addition to this. And you can see also on this relative strength down here that it's starting to make higher lows and is flirting with the downtrending moving average and is in a position to start to turn up. Now this is as of February. So 2 stocks were looked at. The point here was that when you see the initial sparks in a sector or an industry group, go into the group and look for the leadership. And here we can see Rio Tinto was not only in this group and was leadership, but had formed a spring and then had rallied up sharply and had gone to new highs above the resistance area and looked like it was in a position to start a new important uptrend. Relative strength had been up throughout this whole period as US mining was in its trading range. Okay, and then here is BHP Billiton. These are both mining companies, widely diversified, are mining a number of different materials that are important to the real economy. Here you can see in 2018 that we have a range-bound market here in BHP Billiton. It was making higher lows while Rio was springing and making slightly lower lows. The relative strength looks terrific and continues to just flirt with a rising moving average. It goes back to it and then rallies again. And you can see that the relative strength is quite strong against the S&P. So this is a strong stock in a leadership stock, not only to the mining stocks, but also to the market as a whole. Here is the US mining index brought up to date. And you can see that there was one more attempt. So here was the jump. This is a point at which this blog was published. Then there was an attempt to push back up. It tested this area, which was a very minor climax, and then it came back one more time and retested the support area before it began to turn up in earnest. And look at how beautiful this current advance is. It's really showing great persistency in its week after week uptrend. Also, the relative strength is now clearly above a moving average that is flattened out and turned up. So this looks like, this group looks like it could be important leadership going forward. So we're going to want to see a resistance to pulling back. So the backups are dull and quiet, volume dries up, and then ease of movement up to the resistance area and then out of the resistance area. Okay, so having looked at that, here is BHP Billiton. And here you can see that this was a stock that was leadership. And this is a very important notion, is that when you have leadership, it tends to, if anything, become stronger because there's all this positive feedback to institutions that the stock is working, it's contributing to performance, it's outperforming the market as a whole. This is a good stock to own and to add to. And so here is BHP. It had a little bit of a pullback. The volume has been light on the pullback, and now it's turning back up again and pushing higher, and again with really good relative strength. So this is a long-term beautiful uptrend in BHP. Just looking at the point and figure chart here, there is 29 columns. If we go from the last point of support and we go all the way over to the automatic reaction, we have 29 points of in this reaccumulation area. I should draw this for you. So we're going from right here, right across, and then we take this count upward, and it counts up to 70. And so just this is a swing trading count, one box reversal, very attractive, very interesting position, continues to work higher. It's currently at 58 and could easily make its way to $70, especially if the entire industry group attempts to go into a leadership position. Okay. And now let's move on to Rio. So Rio Tinto, again, this is brought up to date. We'll notice what's happened. We looked at it in early February when it was at this resistance line, and keep in mind that the relative strength was already in a dominant position here. So really good follow through. The uptrend was in force. It just kept going higher. I attribute that to having great relative strength, which supported the decisions of these large institutions to be investing in it. And you can see now that there's been a tight, quiet trading range where it's been pausing after this very important move from around $42 up to $61. And so now it's pausing. Relative strength is not pulling back at all. And so this stock looks like it could just continue to run upward from here. And again, with the improving conditions of the underlying industry group, U.S. mining. SSR Mining is a silver mining company. And you can see here, I put this up because it's very clearly an attractive reaccumulation type structure. We, as was discussed yesterday on Market Watchers, that we are in a turning, in a pivot in the economy where economic conditions could start to favor these materials companies and inflation beneficiaries. And so here you can see big climactic surge in 2016, sharp automatic reaction, and then secondary test, and then a range-bound condition with signs of back and forth trading. This is B and A automatic reaction, a secondary test after a nice rally, minor sign of strength. We have a pullback into what we would call a last point of support here, and then a really good sign of strength that clears out all of this resistance, doesn't get above the higher resistance, but pulls back about halfway, a little less than halfway, which is really a good thing. And this produces a larger or a higher up last point of support. And now notice what's happening is that SSR Mining is starting to show a good rally surge upward as though it wants to get to the upper resistance area. So this lower resistance didn't hold it back at all. So this is a one to watch and see whether or not it can have shallow pullbacks and then good strength as it pushes up to the highs here that were made in 2016. And if there is a big element of short covering that's going on in these mining type stocks, keep in mind that they will not pause for long at these upper resistance areas, that they will pause there, but they won't pull back much. And part of that is because short sellers are having trouble getting out of their short positions. And so they literally put support under the market. And in some cases, there's no pausing at all. It just jumps up and out. So this is something to keep in mind, not just with this stock, but with the theme in general. Commodity chemicals as an industry group, very important materials sector. They are a late stage business cycle stage beneficiary. You can see here that commodity chemical industry group is showing the characteristics of accumulation. So we have a selling climax, automatic rally, secondary test, a sign of strength where this rallies up above the resistance area, comes back in one more time, produces an LPS, last point of support, and this is typically the last pullback before you start a markup. Well, look at what's interesting here is look at this really good bullish bar on volume that pushes this group up and out of the accumulation area. And now we can see that even though there's elements of climactic action in that big bar, which is a bullish bar, we can see that in this case, commodity chemicals are dull and quiet and just hanging out at this area. They may have an attempt to pull back a little bit towards the old resistance, which becomes new support. But this is very productive because it really shows that there's a change of character in commodity chemicals. And again, this is a perfect example of an important materials type sector that's essential to the industrial economy. And this would be a area that we would expect to be a dominant theme in a advanced late stage expansion of the economy. Notice the relative strength here. You can see that the relative strength since really late 2017 has been toppy, turned down, has gone into a primary downtrend, and this downtrend has kept commodity chemicals in a laggard position. You can see here that it really indicated with the failing relative strength that this was all distribution. And then notice the sharp collapse of these commodity chemical stocks after they attempted to have a rally upward towards the highs, but really much weaker than the whole market. So you can see in 2018, when the market was in a trading range, commodity chemicals were just persistently getting weaker and weaker in relative strength. That's the reason we think of relative strength as X-ray vision. And we really pay very close attention to that. Well, now look what's happening. We have what appears to be a base in the relative strength with a jump up above the long-term moving average on the jump up in price. So they're both in gear with each other. Now, the moving average has not turned up yet, but we've had an attempt to, we've jumped above it, and now we're backing up to the moving average. And from here, after say a pause in this area, we would look for a continuation of the relative strength as leadership to confirm our evaluation of this accumulation area as being complete and the potential or the expectation of a markup to occur from here. Now, here we have the same commodity chemical industry group with a point and figure chart, traditional scaling, 3-box reversal method. I just made a blue box around the area that we're going to count, took the full count, and just so that you can see the potential here, you can, from the low 388, from the count line of 432, we have here these two counts for our count area, and we have 31 columns across times 3 times the scaling here of 4. That's 372 industry group points, and that gives us a count of 768 to 804. Now, the count line is 432, like I said, and 388 is the low. Currently, we're in the area of 480. So we have from 480 up to 760 to 804 for this industry group. And so impressive potential here that has been generated just since the fall of last year. So point figure counts can build quickly. And in this case, it's always a good idea to go back and look at these counts. And the industry group counts, I find, in my experience, are quite good and are very, very effective in terms of giving us an idea how far the group can go. Now, I leave it to you for homework to go back and look at this group, at the commodity chemicals, and identify the best leadership stocks in the group. And we want to do this not just with commodity chemicals, but with all of the potential groups that could be leadership here, but this tells me that this group has a true potential to be leadership if we can get this next leg of the bull going here. Okay, so very exciting potential. Industrial machinery. This is another industry group theme. We can see a beautiful reaccumulation type structure. We have a climactic surge here that took us into, with the market, into a high, which produced a range-bound condition. Notice how resistance, how well it has held industrial machinery in this area for now, wow, 18 months. And then here is the support area. And notice that we've had a pretty good shakeout late in the decline, which occurred into the end of the year when the market as a whole was weak. Really good rally. Notice how this rally has been as good as the market's rally in that time period starting at the beginning of the year. A pullback. Now this pullback has produced what we are going to call a last point of support. And now there's an attempt to rally up to resistance. Time will tell if it can get through this area, but so far there's a good attempt to push up into resistance and attempt to climb out of this area. Now, again, our X-ray vision, which is relative strength. And you can see here that the relative strength is making higher lows throughout. With the really good rally in the market in the first part of the year, industrial machinery is slightly outperforming a very strong market, which is bullish, very good. And so we can see now this pullback here to the last point of support right here is to the moving average line, which is rising slightly, and we would look for it to turn up here and start to show leadership again. So this is a very exciting condition, and we will keep an eye on that. Okay, in the time that we have left, let's just look at some interesting stocks. This is in the industrial machinery area. This is ABB, and the thing that stands out to us is that it's got a very attractive looking accumulation structure. And so we can see climax, automatic rally, secondary test into a lower low in phase B, and then a series of secondary tests. Now look, big sign of strength, backs up, makes a higher low. We call this a last point of support. Now look at the ease of movement as it attempts to move up and out of the accumulation area. And again, what we want to see now is for ABB to go sideways here, show little ability to be able to pull back, which would help to demonstrate that the accumulation is about complete. This is a daily chart. The relative strength here, keep in mind, this is daily relative strength, which looks good. So, but it's not our normal weekly look with weekly data. This is Xylem. This is the point figure chart. I'm not going to draw out the count, but I get a conservative count from across here. I have 15 columns times 3 gives us 45 points, gives us a count of 106 to 119. And so there's a much bigger count available here. So have a look at this 3-box reversal. Have a look at Xylem. Very interesting point and figure structure. Next one. Apologies, I was having trouble working my mouse, but here is the vertical weekly chart of Xylem, and you can see here how beautiful this reaccumulation type structure is. Beautiful rally after a spring, up and out, pulls back to the moving average, last point of support, attempting to run up now, run up and out, into a new uptrend. So this is a very compelling and has good leadership qualities. You can see here the relative strength is showing leadership characteristics. Also looks really interesting. Okay, so the next one is GDX. This is the Gold Miners Index, and you can see going back to 2016 that this has been in what looks like a very large reaccumulation type structure. And this, we have a spring that occurred with a major test, and then a rally back in, attempts to back up, goes to the moving average. This is a higher low. And now look at the incredible surge up and out of this range bound condition. So you can see resistance, excuse my lack of being able to draw a straight line, but you can see that that's really pathetic. Anyway, you can see there that the uptrend was quite good here and became really dynamic here, which says to me that there's an element of short covering that's in these gold mining stocks as they just go nearly vertical as they go up and out. And so I would expect that if there is a pause in these stocks, that it be shallow and probably brief. So we will keep a close eye on this, and I would suggest in the meantime that you go in and look at the gold mining shares and see where the leadership is. This will be a good exercise for you. I know that my artistic license is poor. Anyway, here is a point and figure chart of GDX, which we just looked at. These are the gold miners, and this is a swing trading count using a one box reversal method. And because we straddled the $20 area, I made it a user defined one box scaling or 1 point scaling. And here in this case, we have 22 times scaling of 1, so 22. And from the low and from the count line, which is at 18 and 21, we get an objective of 40 to 43. And currently we're at around 25.52. So there is potential in this rally. There may be more, so we can look at some other structures for point and figure and see if we can identify larger counts to be taken. But here, this is a very good looking point and figure, very straightforward count that we can see here, and it has some pretty good potential. This will be the final stock that we'll look at today, which is Franco-Nevada gold miner. And here you can see that there's really a very large climactic surge, automatic reaction. This produced a resistance area. Look at how well this resistance area worked. We can see an attempt to push above it once, twice, and then a failure that came down, not all the way down to the lows. So this might be our first point and figure count here. Really good rally off of what I would describe as a minor spring here, because it doesn't go below this low. But look at the rally that follows, big change of character. So rallies up, pulls back, and now it's jumped up and out really dynamically. And so let's quickly look at the point and figure. I've only taken Franco-Nevada over from here to the this low at this point. This is a count 21 columns times 3, which gives us 63 points added to the count line at 69 and added to the low at 58. That gives us a count 132, 121. So lots of potential here, but notice this. Look at, you can extend this count all the way over to here. I leave that for you to do, and there is even potentially a bigger count than that. So with that, I thank you so much for attending, and we will see you next time. Take care.